Good afternoon, everyone, and welcome to Yes Bank headquarters to discuss our quarterly results for September 30th, 2015. I'm very pleased to share with you that this quarter also coincides with 11 years of commercial operations of Yes Bank. So we celebrated our 11th anniversary only a few days ago, and so we have now a track record of 44 quarters over the last 11 years. Getting down to the numbers, I'm very pleased to share with you that our profit for the quarter was at 610 crores, which is an improvement of 26.5% compared to the corresponding quarter last year. Net interest margin improved marginally to about 3.3% compared to 3.2% in the corresponding quarter. A significant part of this earnings was attributed to the overall improvement in net interest income, which year on year has improved by 29.4%. The other significant improvement this quarter is in our CASA. CASA went up to 25.5%. This is the first time in our life cycle of 11 years that we have crossed CASA of 25% and are very much on track to get to a 40% CASA by 2020. Within CASA, the overall growth was 40.5% and SA grew by approximately 62% year on year. I would like to also add that the overall granularity of our liability deposit base has improved further to a level of 52.5 compared to approximately 42% 1 year ago, and therefore our retail liability strategy is gathering further momentum, and as we can see, there is also a lot more granularity in these numbers. The overall advances growth has been fairly good at a level of 29% year on year, and compared to the previous quarter, sequentially a fairly modest 0.4%. The capital adequacy of the bank overall stands at 14.9%, and as you know, we raised capital just about 15 months ago, and we have recently obtained enabling approvals from the board and shareholders and the regulators, and are targeting to raise $1 billion in calendar 2016. Non-interest income in this period improved by 22.2% to a level of 1,618 crores, and almost all the four key non-interest income heads, which is trade and cash management, treasury as in forex, debt capital markets and securities, our overall corporate banking fees and retail banking fees have shown fairly good traction and are getting driven by more and more distribution related earnings pattern. The ROA of the bank remains steady at 1.7%. The ROE improved further to a level of 19.4%, and the cost to income ratio sequentially came down from a level of 43.4% to 41%. Non-interest income to total net income stands at 35.8%, and within the capital adequacy of 14.9, the Tier 1 capital ratio is at 10.9%. The book value of the share crossed 300 rupees and now stands at 307 rupees 30 paisa, adjusted for the dividend that we are likely to pay next year. The gross NPA of the bank has gone up to 0.61%, and the net NPA is at 0.2%. But in absolute terms, it stands at 491 crores and 158 crores respectively. The provisioning coverage is at a fairly robust 67.7%. As I'm sure you know, that this is by far the best net NPA position of any private and public sector bank in our country, and has been the case now for 30 quarters since the beginning of the global crisis in April 2008. So if you see, in 7.5 years, 30 quarters, the bank has amply demonstrated quarter on quarter sequentially that it has been able to preserve asset quality and yet be able to recognize some of the problems that have surfaced by maintaining a fairly high coverage ratio. Getting into a little bit more detail in terms of the overall composition of our advances, our corporate banking businesses, which are segregated between 8 relationship groups. So it's not like one single group, but we have 8 relationship segments which have different characteristics, different balance sheet strengths and capacities, and collectively this business is still our largest segment at 68.2% compared to 71.4% last year. So naturally the remaining growth is being driven by our retail and branch banking businesses, which are led by Pralay Mandal, who's sitting on my left. Within retail banking and branch banking, we're also seeing a fair amount of traction in terms of the depth of the business, in terms of the granularity of the business, in terms of the pulling power of the business driven by our branch strategies. So our medium-sized SME businesses now contribute 13.3% of our total retail banking. Micro and small enterprises contribute about 11.3%, and consumer banking, which is like individual lending, both urban and rural, now constitutes 7.2%, aggregating into 31.8% in totality. So retail and branch banking SME businesses now stand at 31.8% compared to 28.6% 1 year ago. In the press release we have made, we have enhanced our corporate disclosures, our portfolio disclosures quite significantly this time. Based on recent interactions I and my leadership team have had in the US, in non-deal roadshows that we have done, and more recently in Singapore and Hong Kong. So we have received some excellent feedback on the bank's overall financial performance and have supplemented our disclosures in line with expectations of the stakeholder and investor community worldwide. The overall foreign ownership in the bank, for everyone's benefit, is moving between 41 and 42% FII ownership. We have no FDI in the bank, so we have significant headroom for additional FII and FDI ownership in the bank. As you know, by regulation, this can go up to 74%. We also presented to you a sectoral distribution of our advances in a fair amount of detail in consonance with Basel III norms. So when you take some time to look at the press release, you will see that there is tremendous diversity, geographic, industry, and spread over manufacturing, which constitutes approximately 31% of our total lending. Services constitutes about 60-odd%, and agri at present is, because this is like the end of the low season, is just around 3.5%. So there is a fair amount of geographic as well as GDP-related distribution in terms of the overall composition of the advances portfolio of Yes Bank. I'm sure there will be questions because we have them all the time on sensitive sectors. I just have 2 more minutes of my commentary, and I'm also equally keen for the questions.